GM, good morning. Welcome to the Milk Road Show, the daily crypto show where the suits are finally stepping on the field, but we've been running routes for over a decade. I'm your host, Jay Hamilton. It's Thursday, May the 22nd. Now, today's episode was recorded on Tuesday, May 20th, but buckle up, folks. It is full of so much alpha. Today, we are joined by the legendary Arthur Hayes to talk about April 9th. Why is April 9th such an important day for Arthur? It has nothing to do with tariffs, but he saw a signal on April 9th that said to him, let's go risk on. It is time. So we're going to break that down so you guys understand why that's important. And it leads to the rest of his cycle predictions. He's going to give us his prediction, bold prediction, very bold prediction for Bitcoin in the next 2 months. We're going to talk about altcoin season. We're going to talk about Bitcoin dominance. We're also going to talk about Treasury Secretary Bessent's liquidity lever. What happens if the Fed and Jerome Powell don't play ball, which it doesn't look like they're going to? Can we still get liquidity in the season? Can we still get a risk-on environment? Can we still see Bitcoin and crypto do well? Well, Arthur's going to break down exactly how that can happen. Before we jump in, we are looking for a host for Milk Road Macro. That's right. I want to hire somebody. I want a new team member who can host this show. Somebody who can meet with people like Arthur Hayes and other macro experts, Dan Tapiero, on a weekly basis. So if you're a podcast host or if you know a podcast host, please refer them, hit the link in the show notes, apply today. Today's episode is brought to you by Ledn. Get cash without selling your Bitcoin. It's also brought to you by Coinshift, powering top crypto treasuries with their yield-bearing stablecoin, CSUSDL. Without further ado, Arthur, welcome back to the Milk Road Show.
Thank you for having me.
Always a pleasure, my man. No one brings the energy and the vibes like you. I just can't wait to the day I get to party or hit a ski hill with you. Or try to return your forehand or your backhand in tennis, something like that. Okay, let's start with April 9th. What happened on April 9th that was such a signal to you?
So obviously on April 2nd was Liberation Day, assuming you believe in the Trump nomenclature. And Team Trump rolled out these really aggressive tariffs. The rates were higher than anyone had expected. And the market started melting down. Prices were going all over the place. Stock prices down, Bitcoin down, people throwing a fit all over the place. All these billionaires going on social media complaining about how they lost some money and why Trump needed to change track because they were losing money. Like I think it was Einhorn was whinging on Twitter or X for days on end. And after about a week, dysfunction started to show up in the financial markets and in our fugazi fiat financial world, and evidenced by declining bond market liquidity, which is really what the authorities care about in any country, because the government needs to fund itself. And so if the market in which the government funds itself, and we're talking about the American empire, the US Treasury market, then they need to do something about it. And so the index that I monitor and a lot of other people monitor is called the MOVE index, and it's an index that tracks bond market liquidity and volatility. And so when this index rises, you get more volatility. Why is volatility bad in the bond market? Because basically the entire fiat world runs a massive carry trade, and they're borrowing dollars and they're buying stuff, right? And so if the volatility increases on the bond market, you're not going to buy as much bonds because you need to increase the amount of equity you hold against these positions. No one's going to lend to you, all these sorts of things. So people stop showing up at auction, they stop providing liquidity in the markets, and things start to break down, and people have to start exiting positions and all these bad things for the very highly leveraged fiat system. So by April 9th, I think the day before, the move closed at like 130 something. And then intraday on the 9th, it hit about 172. And I think it's only hit a level that high 3 other times since this index has been published for the last like 20 or 30 years. So, and that's encompassing 2008, COVID, 1987, 1998, all these pivotal dates in sort of global financial crises over the last 3 or 4 decades. So really, really bad. And then you get Jamie Dimon goes on CNBC and starts talking about how tariffs are bad and the markets are melting down. And obviously that was enough. And then all of a sudden Trump rolls out the 90-day pause and everybody except for China. A few days later, Secretary of Treasury Bessent gets on Bloomberg and talks about how he's got this tool, the Treasury buyback, to make sure that the Treasury market functions well. And that was basically the bottom. So that was 74,500 on Bitcoin. I don't know what the level in the S&P and the Nasdaq was. I think they were down like 20% over the from that previous week and a half. And since then, it's been up only. Bitcoin's up, what, 35% since then. S&P, Nasdaq are green on the year since then. Credit spreads have declined. Things have returned to normal. Liquidity is back. Volatility has declined. All these sorts of things. And the move is like, I don't know, 110 or whatever it is now, right now. So that was the date. They pivoted. They provided a monetary stimulus in the form of, we're not going to try to divorce this global system that we said we were going to, at least in the same manner or pace that you thought we were, as of April 2nd. And everything, oh, great, cool, back to status quo, let's go. And markets ripped. So I hope you bought some Bitcoin on April 9th or 10th or 11th, because I don't think we're seeing those prices again for a while.
I want to give a little bit of a history lesson. I saw your talk at Token 2049 recently, which was, as a fellow skier, calling it full send was just a great title. I absolutely love that. Let's all go full send, baby. It's time. In that talk, you gave a little bit of a history lesson of what Janet Yellen did when she was Treasury Secretary. Can you go back and just give us a brief history lesson? What did she do? Because I think that a lot of our listeners, a lot of people think that only Powell and the central bank has the ability to affect liquidity. And I think that understanding what Yellen did helps us understand the power that the Treasury Secretary has.
Yeah, so let's put our minds back in 2022, what was happening back then. So back then, the United States and a lot of the world was suffering from inflation due to a lot of COVID stimulus that was provided. And obviously it was the worst in the United States because the US provided the most stimulus of any major developed or developing country, aka China, in the world. And so what would happen back then? CPI was, I don't know, 9-10%, something crazy, 40-year highs. You had US President Biden sitting Jay Powell down and giving a press conference saying he's the man who's going to solve inflation for the American people. Now, remember, inflation is very, very bad. Whether you are a dictator or you're a democratically elected leader, inflation affects everyone. And so either you get voted out or you have a revolution if it continues. So everyone wants to make sure that inflation doesn't go crazy. And so the central bank was tasked, aka Powell, to fight inflation. So he's busy, stopping quantitative easing, starting quantitative tightening, which means he is reducing the size of the Fed's balance sheet. He's doing 0.75% interest rate raises every single meeting. He did that, I think, for 3 meetings in a row in 2022, fastest rise in Fed funds rate since the late 70s, early 80s under Volcker. And, by the fall of 2022, the effects of tightening credit, both from a increase in the price of credit and a reduction in the quantity of credit, was taking its toll on the financial markets. S&P was down. The back end of the bond market, 10, 30-year yields were starting to spike in a bear steepening fashion. And in the crypto land, we had the failure of Terra Luna in June of 2022. And that essentially destroyed Alameda FTX and, the financial caper that our favorite white boy Sam Bankman-Fried was running. And by, November of 2022, FTX had gone under. All this is basically a derivative of a increase in the price of credit and a reduction of the quantity. Now, if you're the federal government in the US, essentially you are tied to the returns of the stock market. The marginal driver of tax revenue for the US government is capital gains taxes. So rich people who make money in the stock market, top 10% of US households who own all the stocks. And so on the one hand, Biden has to make sure, or whoever is handling Biden, because we know he's a vegetable, or he was a vegetable, I guess still is. Whoever is handling him said, okay, we need to juice the markets, but we can't have inflation. We can't be seen as sponsoring inflation because that definitely means we're not getting reelected. So, okay, Powell, you keep doing that inflation fighting thing. Now, Janet Yellen works for the government. She needs to make sure that the federal government needs to get funded at an affordable rate. And right now, rates are not affordable, as Powell has to raise rates to quash this inflation. So is there a way that they can defensively juice the financial markets to make sure that rich people make money and therefore pay more capital gains taxes, but retain their inflation fighting credibility at the same time by having Powell do his thing? And so, I call her bad girl Yellen because she was really the one in charge. Her or one of her staffers said, "Oh, there's this sterilized $2.5 trillion sitting on the Fed's balance sheet in the reverse repo program. Why was it there? Because so much money was created during the COVID time. People had all this cash." And they said, "Oh, the bank is paying me zero, but these money market funds, because the rates are rising, that because the Fed's raising rates, are paying me 2, 3, 4, 5%. So let me put it at the money market fund. The money market fund parks it at the Fed and earns a risk-free Fed funds rate, essentially. There's $2.5 trillion in here. But this $2.5 trillion is not being circulated in the economy. And so Yellen says, okay, I'm going to issue more Treasury bills that are securities less than 1 year versus Treasury bonds, so the long 10, 20, 30-year bonds. And because I'm going to have a yield higher than the reverse repo, maybe 5, 10 basis points, I'm going to pull that money out of the reverse repo program because money market funds are yield seeking. They want to earn the maximum amount of money for their clients as possible. And a Treasury bill versus a reverse repo are pretty much the same credit risk. It's still a US government, essentially. So they're going to remove money from the reverse repo, put it into Treasury bills that Yellen is selling, and that takes $2.5 trillion out of that facility and juices the financial market. So if you take a look at sort of from third quarter 2022 up until early 2025, we reduced the reverse repo from 2.5 trillion down to essentially zero. And Bitcoin 15,000 to was it 110, S&P rips, NASDAQ rips, gold rips, everything rips, right? And so if you were stuck in this, oh my God, Jerome Powell is a new Paul Volcker, I should not be investing. I need to wait until the Fed cuts or starts QE again. You missed a monster rally because you were focusing on the wrong person. Janet Yellen was in charge. He said, I'm going to juice the markets. Here's a way that I can do it. And $2.5 trillion was essentially reinvested into the global financial markets. So that was 2022. And I think people were making the same mistake in sort of earlier this year when they said, okay, when's Powell and Trump were having this feud about like independence and this and that, and who's going to retire when and blah, blah, blah. And when they're going to cut the rates and, quantitative tightening, quantitative easing, and he's so focused on the Fed. And Besson says, okay, don't worry about him. I got Treasury buybacks. In the same way that Yellen had the reverse repo program, I have Treasury buybacks. And so believe me when I tell you that the Treasury market will be well functioning and my boss, Donald Trump, will get all the money that he needs to get at an affordable price. And he didn't say that explicitly, but that's implicitly what he was saying to the Bloomberg journalist who asked him this question. And so, as of, third quarter 2022 versus today, we have to listen to the Treasury Secretary because they have all the power. When you issue $36 trillion or have a $36 trillion pile of debt, you're the one in charge, not the Fed.
Can we call him BBC?
The big Besson cop.
Show.
Yeah, he's BBC.
I'm cool with it. I'm cool with calling him BBC. You came up with it, not me. So
yeah.
Okay, let's explain Treasury buybacks. I could pull up a slide that you guys created at Maelstrom because I really want everyone to understand how Treasury buybacks work because it's easy to get lost in a lot of the lingo here.
Yeah. So imagine, you have this stuff on your books and it's the old stuff, right? Nobody wants to give you money for the old stuff. You go to the bank and they go, I want the new thing. I'll lend you money for the new thing, but of the old thing, I don't know if I want to lend you money on that, right? So basically, as you run this basis trade where you buy an on-the-run bond and you sell a Treasury futures contract, over time, the on-the-run bond becomes the off-the-run bond because people want the most liquid bond that's closest to the benchmarks, let's say the 10-year, the 5-year, whatever bucket. And so all of these hedge funds, who are essentially the marginal funders of the government, are long all these illiquid Treasury securities. And the banks say, okay, the less liquidity that these securities have, the more I'm going to charge you in terms of margin. And therefore, these hedge funds can't do as much at auction because they're not getting as much leverage. And so what can Besson do? Okay, well, if these guys are the ones showing up in auction and they're willing to buy debt at whatever price I'm issuing it at because they're just running an arbitrage trade, well, how can I make sure that they're able to get more leverage from the banking system? Well, I'll take that old stuff off your books and I'll give you some new stuff. And I'll do it in a way that is budget neutral, meaning I don't need to go to Congress or get some approval. I sell a new bond. With those proceeds, I buy the old bond. And so the old bond trades a bit rich, a bit expensive to what it should. So the hedge fund makes money. And then they put the trade on again with a new bond. And the bank says, oh, great, you got new stuff. I'll give you more leverage. And so then these hedge funds can show up at the Treasury auctions and bid on debt. And that's essentially what the Treasury buyback is. It is not, money printing as a first derivative. It's more the second, third derivative of its effects that gets us to the ability for the banking system to give more leverage to hedge funds that are the ones showing up at Treasury auctions and bidding on debt at whatever price Bessent wants to issue it at. So I think everyone needs to remember, yes, Bessent was a guy who broke the Bank of England, and he's this amazing macro trader, and he's talking about fiscal responsibility and all these nice things that Wall Street likes to hear. But at the end of the day, he's a bond salesman for Donald Trump. And so forget all that shit about what he did before. It doesn't matter, because his job is to sell bonds. And so he's going to tell you whatever he needs to tell you. He's going to prostitute his reputation as this sort of fiscal responsibility person to sell more bonds. That his job is not to make the government more efficient or any of the other stuff. His job is to sell bonds. And so if he needs to do Treasury buybacks, he'll do Treasury buybacks. If he needs to continue doing Yellen's policy of issuing more bills and bonds, he excoriated Yellen. He said, oh, you're a fucking idiot for not terming out the debt when the debt was so cheap. But guess what he's done in the last two quarterly refunding announcements? He's done the exact same thing as Yellen, because he's in a box. He's got to sell bonds. You want me to sell bonds? I sell bills, because that's what people want. Or do Treasury buybacks. Remember, he's a bond salesman. He is not a hedge fund manager anymore. And I think people remember what he is. So whatever his personal view on the situation is, he's got to sit up there on Bloomberg and Financial Times and a Milken Institute, and he's got to read the talking points, because that's his fucking job, and his boss is Donald Trump. He's not his own boss anymore.
Selling your Bitcoin should be a last resort when you need cash. That's why there's Ledn, the trusted platform for Bitcoin-backed loans. You can unlock cash in as little as 18 hours with no monthly interest payments and no prepayment penalties. They've issued over $9 billion in loans and never lost a single Satoshi of client funds, even during the chaos of 2022. If you're a long-term hodler, this is the move. Get liquidity without selling at milkroad.com/Ledn, spelled Ledn. Meet CSUSDL, the stablecoin built for institutions and DAOs. Don't just hold basic stablecoins, earn yield, all without compromising security, backed by regulated real-world assets and secured with institutional-grade risk management by our friends at Steakhouse Financial. Put your treasury cash to work, earning native yield and protocol rewards. Built by the team behind Coinshift, which is trusted to manage over $1 billion in business treasuries on-chain, including Aave, Gitcoin, and hundreds of leading institutions. CYCSUSDL is gaining traction at milkroad.com/Coinshift. I want to touch on a few things here within the U.S. Let's talk first about Trump tariffs, because I want to talk about what are the risks here, and a lot of people are worried about tariffs. Obviously, much less worried now than we were a month ago. But I don't think that uncertainty and that FUD has disappeared by any means. It's still pervasive throughout the market. I think there's a shift happening, but we're definitely not in risk on territory right now. Like, we're still more in risk off than we are in risk on. Are you worried about tariffs? Are you worried? I mean, the big worry is that China and the US aren't going to be able to come to terms. Like, that's the big concern. We have a 90-day pause right now. Are they going to, is that a concern, or does it lead to the same end result regardless of what happens?
I think tariffs, if we take a look to the next year around the same time, we're going to see a similar Chinese trade or capital account surplus and a similar U.S. trade deficit. The tariffs will have done nothing, because at the end of the day, they're too painful politically to properly execute. And I wrote about this. So number one, you have to apply the same rate to everyone. You can't have China at 100% and some countries at 10%, right? Because then what do, right? Okay, well, if I'm at 100%, that country's over here at 10. Well, I'll pay you a little bit of VIG, country at 10%. I'll ship all my shit through you. You rebrand it and sell it to America, right? You make a little bit of money on the top. I get to reduce my effective tariff rate, and everybody's happy, right? U.S. consumer pays a little bit more, and then everybody gets to claim that tariff did something. There's a little bit more revenue at the Treasury Department in the U.S. and tariffs worked. No, they didn't work. They didn't do shit, right? Because not everyone is on the same side as the U.S. Then it's not, is it a China issue? But it's not always a China issue. The number 2 and 3 largest sort of trade countries are, Taiwan and Japan and Germany. And these are staunch, South Korea, these are staunch US allies who have hundreds of thousands of US military personnel on bases on their home soil. And these are bases that are very unpopular with their domestic population. Japan has 120 US military bases. Japanese do not like that. But the politicians say, I don't give a fuck, right? We are staunch allies of the US and we'll host these bases. So how can Trump go and say, oh, we're going to destroy your export industry by putting 100% tariff to reduce your trade surplus down to zero? And at the same time saying, oh, please host all these military bases. And if things kick off in sort of the Sea of Japan or with China and Russia, we expect you guys to host, our naval fleet so that we can hem them in. Like, this doesn't work, right? So you can't, geopolitically, they cannot charge the same tariff rate across the board. So then there's always going to be cheating. So number one, it just isn't going to work. And then number two, the American public doesn't want expensive stuff. So they hate inflation. So you're telling them, oh, you're going to go to Walmart and it's not going to be everyday low prices anymore. Who's in charge? Republicans? Okay, let's put the Democrats in charge. Let's see what they do. And then, so it's not a, red versus blue or Democrat Republican thing. It's the guy in charge made my shit go up in price. I'm broke as fuck. Therefore, I'll put in the next person. And I think finally that message is percolated through to Trump, which is why you got the first 90-day pause. And now you have the next 90-day pause with China. And I'm sure there's going to be some sort of like optically nice agreement that both sides are going to claim to do something to reduce these imbalances. But I don't think tariffs are the way. And so if you're afraid that global trade is going to decline because of tariffs, I'd say, that's the wrong thing to be afraid of. What I would be afraid of is capital controls or some sort of taxes on foreign capital invested in the U.S. that is a way to over time reduce the imbalances. Because you can either attack the trade account through tariffs, or you can attack the capital account through capital controls or taxes on the foreign ownership of assets.
And dive into the fear around capital controls. Is that a real risk for us right now?
I think for the United States, it's the only way that they're going to be able to reduce these imbalances. What does that mean? And a modest, even a 1% tax on all portfolio assets invested in stocks, bonds, and property would yield hundreds of billions of dollars in revenue every year. And so at that point, then the foreigner who owns this stuff is like, okay, well, the yield at home is X, the yield in America is Y minus tax. Does it still make sense for me to invest these assets in America? Maybe I don't like to pay taxes. Okay, cool. Well, then I'm going to take my capital, sell what I have, sell the bonds, sell the stocks, sell the property, take that capital, repatriate it back to my own country, and then my domestic currency appreciates. And over time, that currency gets so expensive that the export competitiveness levels out, and maybe manufacturers do want to move stuff back to America because, on a purchasing power parity basis, these East Asian, I'm using them as an example, currencies like Taiwan dollar, South Korean won, Japanese yen, Chinese yuan are a lot more expensive. Therefore, I'll move my factory. Now, this is like 5, 10, 15, 20 years sort of process, but that's sort of how you get to the same place that the tariff would get you to. What's the problem for U.S. financial markets? Well, foreigners were the driver of returns for the past almost 30 years, right? Since China joined the WTO in 2001. So if you take that buying power out of the market, then stocks crash, bonds crash, property crashes, unless they print the money, which is obviously where we want to know as the crypto holders or Bitcoin holders is when they're going to print the money, why they're going to print the money. So this is why they're going to print the money, because they're very, Democrats and Republicans are very on this. We need to rectify these imbalances. The rhetoric is different depending on who's in charge, but the intent is the same. It's going to happen. And so, okay, well, neither party can tolerate the financial markets declining in value because, number one, there's a lot of taxes to be made from those, and all their donors are rich, and that's what they own. So they need to make sure that they're protected. So what do? They're going to print the money. And so that is how we get to $1 million Bitcoin, is capital controls, forcing foreigners out of the U.S., the U.S. saying, okay, great, we don't have the foreign money, we'll just print it instead to keep our markets afloat so that we can charge taxes and afford, this welfare state that we've created for ourselves.
Everyone likes to say $1 million Bitcoin, and for good reason.
I'm manifesting it. I just keep saying it. Maybe
just keep saying it. Yeah. Let's go. I don't think maybe it will happen. It will happen. But when, right? I want to, just because we're talking about $1 million Bitcoin, I want to get down to a more when level of like the next year. But just because we're talking about when do you think $1 million Bitcoin could be realistic?
I think that we're going to have a crack up boom in sort of like 2026, 2027 time period. I think if we're going to have $1 million Bitcoin, that's when it's going to really manifest itself.
Okay. Let's talk about short term right now, the rest of this year. A lot of pundits, a lot of experts saying, pretty much the same thing that maybe basically very similar to what we were saying coming into 2025, which was, we're gonna end Q4 is gonna be peak. Maybe it goes into Q1 2026. Lots of people saying, maybe we're pushing it back a little bit. And it goes into maybe Q2 2026. What's your timelines right now? Do you think that we could see a short term little bull market here through the summer? Do you think everyone sells in May and goes away for the summer?
I think I think we can go, we go through 110,000, and then so we sort of run until in the 150 to 100 $200,000 range. I think that could happen between now and sort of like early July of this year. And then I think sort of the next decent correction, and that maybe is a 15 to 30% correction, I don't know, will be in August, between late July and late August, because what has Trump done essentially? And as a trader, I love it when politicians put these binary outcomes, because then it focuses all attention on these dates, and then I can almost certainly know that there's going to be something that's going to happen. And usually, volatility in the first instance isn't great for what you own, so you want to be sort of de-risking. So what do we have in July, late July through? And I say the pivotal date here is a Jackson Hole symposium by the Fed, where I think they're going to radically change what they're doing. But so end of July is the first X date for 90-day tariffs for everyone except for China. So how many deals is Trump going to have announced? And if he hasn't announced a lot of deals, is he going to ratchet up the pressure on the tariffs to those who didn't come to the table? I think yes, because that's his negotiating style. He wants to get a little bit more juice to present to voters in 2026 about how amazing the Republican Party has done at this campaign promise of reducing the imbalances. So I think Trump goes a little bit more maximalist pressure into these dates, maybe even goes over them, because he's like, okay, well, the markets are already up on the year, so I can afford to have things decelerate a bit if I go a little bit hardball on the tariffs after this 90-day extension. So I expect a lot of volatility. I think it's in middle of July, whenever that is the rest of the world. And then China is, I think, August 12th is when their extension expires. So again, a lot of volatility. Trump saying, no, we're not doing a deal unless it's very good for America, yada, yada, yada. The market's freaking out. Oh my God, they're not going to do a deal. And so we go back to sort of the April 2nd to, that week sort of volatility in the markets. And then we have the debt ceiling. So, I mean, assuming that there's no sort of bill passed to fund the government and the debt ceiling raised, that's essentially when the market is saying that the Treasury will run out of extraordinary measures to fund the government in the mid-August period. How do I come up with that date? You can look at the T-bill market and the term structure, the interest rate curve, and look at for kinks in the market because of how the rules are around money market funds and how they have to mark their books. They can't have a bond that doesn't get paid. It reduces, it might have their NAV go below 1, and that's sort of regulated as very, very bad. And so they don't want to own those bonds, so they believe are could expire when the Treasury can't pay them back. Now, everyone believes that the Treasury the debt ceiling will ultimately get raised. So you're going to see a kink in the yield curve. And that's when you would say, okay, that's when the market says there's going to be the exit. And that's right now is around mid-August. So we have all these things happening around then. So I don't want to own a lot of risk from late July into the Jackson Hole symposium. And so then we get to Jackson Hole. What do we expect from the Fed? If markets are crashing because Trump is trying to get a little bit more juice out of these tariff negotiations, ultimately they'll go back to status quo. We know that's what's going to happen because they can't take the volatility. Then we get the setup for Powell to do supplemental leverage ratio exemptions. We set the stage for Powell to announce that he's ending quantitative tightening, but the receipts from maturing mortgage-backed securities will be buying treasuries. He's already said that they're thinking about that. So I think those two things could be on the table to be announced at Jackson Hole. And then we get just rip roaring markets from then until the early first quarter of 2026.
So what's the I have two questions here. One, like what's the short-term catalyst? You're the only one that I'm hearing say this right now, that like we could go to like 150, 200K Bitcoin this quickly. Lots of people saying we could be there by the end of the year, but not a lot of people saying that we could be there by July, right? And I'm all game, Arthur. I'm in. You got me convinced. But why? Like, is the Treasury buybacks, does that have impact this quickly? Is that the catalyst here, or is there something else?
I think it's just FOMO, right? So, we hit the
Sentiment.
110, went down to depth of, oh my god, the bear market's over, da 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 da. We went down to 70 something thousand, and then these people always never, Bitcoin's never going back above 110. That's it, right? So then it hits 110, then fucking on high volume eclipses that. That means it's game on, right? And then we run, and it's not based on any major new fundamental change. It's the same thing. Everyone believes they're going to print the money. And so then all the confirmatory biases start being, oh, the US government's going broke. Oh, they got downgraded. Oh, look at the deficit. Doge isn't working. Oh, this, oh, that. All these things that already happened that you could have bought Bitcoin at 74,000. Now it's, oh my God, that the situation has just changed so dramatically. When there's no new information, it's just that the price changed. And so all those things that were positive in your mind get you to buy more Bitcoin at 110, 125, 150, right? And so we just run. And so that's the this human psychology and how markets work is why I think that we run to those sorts of levels very, very quickly, and then have a pause.
And if that happens, do we get altcoin season? Is this Bitcoin just increasing Bitcoin dominance, or is this going to trickle down and cause an altcoin season in the short term as well?
I mean, obviously, ETH had a good run, but it's still 25,000 at a level of Bitcoin. And then the Bitcoin ETH ratio is still not great. So, to really get all dominance going down, you really need ETH to rally. And so we'll see if that happens. But, I'm more focused on Bitcoin right now because that's what everyone owns. The people who are afraid of a bond market meltdown, who own a lot of bonds, the large institutions of the world, now they have this Bitcoin ETF and they can buy it and they can express that fear in terms of buying Bitcoin. And if the price keeps rising, then it just confirms that, oh shit, something's happening. It's not just going away. It's not just high beta NASDAQ, right? So, or it is high beta NASDAQ and it's crushing the NASDAQ this year. And guess what? I can join the train. I can join the party. And so that's why I think Bitcoin dominance probably either stays flat or increases if we go on this run. I think altcoins really come into the space sort of like later in the year once we get into the meat of the rally.
Okay, so let's talk about that. So we're up to we've gotten up to July, everything, stay away, be careful, all these indicators that you're saying that you're going to be watching. Then we go into the fall. Do you think recession and things are not looking good, or do you think we're pumping and we're heading to Valhalla into the later half of the
I
year?
mean,
What do you think? I know
I
it's
don't
difficult to
care.
predict this far away.
No, I mean, recession is irrelevant. Who cares? Doesn't matter. We don't
Okay.
care about recessions. They don't matter. All I care about is money. How much money is there in the world? China is busy, dealing with a debt deflation trap, and they're not printing enough money to get themselves out of that by choice. And so, even though the fiscal deficits are massive in China, it's just not enough to get things really, really going. So they're kind of out of the picture. We'll see what happens with Japan and what the BOJ does in June. I'm not sure. EU is irrelevant right now, and so it's really all the show is it's the Trump show. And think about by the fall, it's almost 1 year out from midterm elections, and Trump needs to start showering goodies on the Republicans to get reelected. And so it is full time. It's full send time for the economy to start going gangbusters. And what does that mean? You need to give credit. That is what the U.S. economy is based on. It's credit, and so that is supplemental leverage ratio. That's Treasury buybacks. That's ending the conservatorship of Fannie and Freddie. There's all these sorts of things that they can do to increase the credit into the system to start juicing at least financial markets to start with. And that's why I think the fall is when they really need to start getting going, because they only have 12 months. The Republican legislators need to start campaigning on what did you do for me lately, is what the voter is going to be asking. And so I think all this talk, all this doom and gloom, that's out the window. It's America's the best place in the world. Look at what we did in the first 100 days. I'm fucking amazing. We beat back China. They fucking bent the knee. We did the deals in the Middle East. All these sorts of things, right? Maybe there's a recession. Maybe there's not. I don't really care. It doesn't matter. I just know the money needs to be printed. The markets need to go up because the party in power is getting reelected. In the same way that the Democrats did the same thing with, Fed cut rates for Kamala Harris. Unfortunately for them, she lost, but it's the same playbook at the end of the day. That playbook really starts in earnest in the fall. And so that's why I think that's when we get the real juicy, just like day after day of just green candles everywhere across the crypto ecosystem. And everybody feeling good, and we just got to buy stuff.
And do you think we'll get an altcoin season like in the past where everything goes up? Or do you think it's different now?
I think people are getting a little bit more discerning. Now, that being said, I don't know what the new piece of shit narrative is going to be.
You don't
I
know
what it is. I don't know, but hey, I'm a trend follower. If the trend is your friend until it ain't. So I'll be trend following. I'm momentum trading the shit out of that. Whatever it is, I don't care. Doesn't matter if it's complete fugazi. We can believe something once.
It probably will be a complete fugazi. So,
but like the stuff that has already launched, the question is, okay, we've done this altcoin season like 3 times now, or 4 times, whatever you want to count it. Okay, where are your clients? Are they actually paying you real money? If they're paying you real money, where's my fucking cut as a token holder? And so I think for any coin that's not new, that's what we're going to be asking ourselves. And there's very few projects that have real clients, pay them real money for product and service. And the benefit of that goes from the protocol to the token holders. So hopefully ETH sort of catches a bid and we sort of get this DeFi resurgence, but it's not going to be all the dog shit DeFi that went up in 2020 and 2021. It's going to be stuff that has, as I say, fundamental season, real cash flows. Cash rules everything around me. That's what I want to see as an investor, as a token holder. And I think we're really going to be rewarded. And I think we've really seen that narrative starting to play out. Obviously I'm an investor and advisor of EtherFi. It was down to like 50 cents, 40 cents, whatever it was, pretty much the lows that it had been at post its token generation event. Thing has rallied almost 3x from those lows. ETH only went up 50%. Bitcoin only went up 30%. Why? Because they've got real cash flows. They're doing token buybacks with 5% of revenue. People are like, oh, okay, well, this is a real project. They've got this new card that they're coming out with. You can spend your staked ETH and other things. So I think those are the types of projects that are going to do really, really well in this altcoin season. And then if you're the next L1 with a massive amount of token supply to give into VCs and no actual customers and no transactions on chain, cough cough bear chain, then you're not going to be doing so well, or Monad or whatever the fuck is a new thing out there. So I think that those are the types of things where people are going to be a little bit more skeptical because the fundamentals and the cash flow just don't match up, and we already had a chance to see it work. Okay, I'll give the benefit of the doubt to something new that has none of that stuff. But if you've already launched, show me some fucking results.
Finally, crypto is growing up to look at fundamentals.
I don't know if we're growing up, but I mean, you learn after so many beatings. Hopefully, you learn something.
Yeah, maybe not though. One thing that I really am getting a lot of insight on right now is the future of crypto exchanges, and particularly centralized crypto exchanges, because we're getting legislation in the US. The Genius Act on the stablecoin side got the vote yesterday. That's great to see. We're probably going to get that through pretty soon. Then we're going to have market structure bill after that. We're going to have a lot more players offering crypto exchange services than we do right now. What is your outlook on the crypto exchange market and the current players? How do you think this plays out? Do you think Coinbase continues to dominate? Do you think that we see new banks enter the space and start to offer these services and they take over because they've already got all the customers and they've got the access to that distribution?
Yeah, so obviously this is a very U.S. centric situation. If you take a look internationally, the market's very, obviously very well developed. You have the dominant Binances, Bybits, all those sorts of players who have the majority of the market share. And what do you see internationally? It's a perfectly competitive market where the only thing you compete on is price. So there's spot trading, and the thing that myself and BitMEX invented, purpose trading. That's it. There's not been really any innovation in the centralized exchange space since 2016. It's really just about marketing and market share. So if you move over to the United States, where it's basically been Coinbase and Kraken offering a pretty toned down service due to the regulations, and now you have JP Morgan said they'll let you buy Bitcoin, for example. If I'm Coinbase, I'd be shitting my pants, right? So you now have the largest bank with the most important banker in the world who literally could tell the president, go fuck off, and he'll automatically change his whole international tariff policy, is now going to be selling Bitcoin. Do you think you're going to be able to charge 25 or I don't know, 100 basis points, whatever Coinbase charges for you to trade spot anymore when JP Morgan can do it for free or whatever, because all they want to see is more balances or AUM, whatever the thing is that the street and analysts are going to reward them on? I think it's going to be very, very tough for a lot of these crypto native firms to compete with the distribution angle and the ability for these one-stop shop financial institutions to offer crypto. Because Coinbase is cool and all that, but if the price is right, the customer doesn't care. And we've seen that internationally where it's literally just about the price. And so I think the price of crypto trading is going to come down a lot in the United States. If Jamie Dimon is going to offer Bitcoin, then Goldman Sachs is, and Morgan Stanley and Bank of America and Wells Fargo and all of them, because they just copy each other now that it's okay to do so. And what are they going to compete on? Bitcoin spot trading, Bitcoin is not that hard. It's the product is pretty simple. It's just price. And so, great for the US consumer. The price is going to come down. You're going to have a lot of choice on which exchange that you want to use. Now, I think that if you're talking about sort of the fun altcoin, shitcoin space, these institutions probably not going to be as forward leaning into that. And so maybe that's where there's going to be some opportunities for players to really differentiate themselves and create sort of a unique product offering. But, if you're talking like Bitcoin, ETH, Solana, spot and perp trading, it's going to be perfectly competitive, very cheap to trade, great for the US consumer ultimately, because there's going to be lots of choice. I'd be very, very worried if I were a Coinbase.
Okay, so you're mega bullish on Bitcoin right now, and you're certainly not the only one. That seems to be the consensus trade right now, and for good reason. Anything else that you're bullish on right now in the short term?
So obviously this is a little bit, it's a bit more private markety, but there's a theme that we're sort of developing at Maelstrom in that we're starting a leverage buyout group internally at the firm, because we see an interesting opportunity, especially within the US capital markets has emerged, right? So if you take go back to sort of the pre-Trump days in Biden, you had this big SPAC boom in the early days of COVID, and then the SEC kind of shut that down. But you have a lot of these SPAC sponsors who raise a bunch of money. They've listed their SPAC security, and now they have 18 months to find a target. And the SEC previously wasn't approving any targets, but now obviously that's changed. It's business. Let's do some business under Trump. And so there's all this capital in the high single-digit billions that needs to find credible targets to acquire. Now, what have we seen in the capital markets do very, very well? These Bitcoin and crypto treasury trades. We were in the UPXI deal. There was the David Bailey and the Nakamoto thing that did really, really well. And so if I'm a SPAC sponsor, I'm like, oh, okay, well, I've got the thing that the market wants is sort of crypto exposure or crypto light wrapped up in a nice tradable security. But where are the companies out there that I can actually acquire? And so, at Maelstrom, like, okay, well, we know how to do this. Let's go and find some cash flow positive companies that are probably not going to be in the exchange space. So it's a little bit easier to digest. We're going to raise some money, buy them out of the books, put in some proper management, dress them up real nice, and then we're going to flip them over to the SPAC guys and give them some companies to buy. And so that's something that we're working on pretty actively right now. We have a few companies that we're interested in doing this in. And so I think there's going to be some interesting public market stuff in the US. It's not exactly just XYZ shitcoin out there.
Not the thing that every one of us listening into this can buy. Can we invest in Maelstrom? Can we get in on
No,
these
you
deals?
can't. You can invest in the SPAC. You can invest in the SPAC stock that ultimately be SPACs. But come on, I got to make some money. That's how I throw these parties.
What about the rest of us, man? I thought we were friends. Arthur, just pleasure to get you back on the show as always. Appreciate your time. And yeah, it's been great to chat with you today.
Thanks for having me.
Thanks for listening in, everybody. Have yourselves a wicked awesome day. I got to remind you, as always, that none of this was financial advice. This show is for information and educational purposes only. You should only invest what you're willing to lose, and you should always do your own research and take some time to don't just listen to what Arthur says or what I say. Actually make your own decisions, everybody. Make your own decisions. You are an adult. You can do it. Appreciate you. Have a wicked awesome day. We'll see you back again tomorrow. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only and nothing we say is financial advice. Investing in crypto or any asset is risky and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.